Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey everyone, welcome back to an all-new episode of the IRS Debt and Audit Podcast with Brian Loughrin. I am your host, Mike Leon. Brian here is a seasoned tax attorney based out in Tampa, Florida. He's also the founder of Tampa Tax Relief. And for more than 25 years, he's been helping individuals and business owners all across the country resolve serious IRS problems, from audits to tax debt to cases even in the U.S. tax court. Today's episode, we're going to be talking about something that makes just about every taxpayer nervous. I know it makes me nervous, and that's why I've reached out to Brian before, is IRS audits. I'll explain. Brian's going to explain. I'm not going to explain. He's the lawyer. He's going to explain what causes them, what the IRS looks for, and what you should do if you ever get that, that letter in the mail that you may throw away. Don't throw it away. Brian's going to explain in just a second. So, Brian, it's good to see you as always. So let's break down in plain English for the listener and viewer out there. What does an IRS actually do? Like, what does an IRS audit actually do?
Thanks, Mike. Yeah, actually, the IRS officially refers to audits as examinations. And basically what they're doing is they're examining not just income, but what was claimed with that income. One of the best things I ever heard is when I first started in this area of law many years ago, a auditor said to me, he looked up at me at one point at the beginning of an audit, and he just looked me right in the eye. He said, "All we have to show is income. The rest is up to you." Meaning, once the IRS can establish income, the rest is up to the taxpayer. And I tell people, listen, it's called the income tax because it's based upon income. No income, no tax. But income can take various forms. And people can have gift income. They can have income from capital gains or from employment and so forth. So it all starts with income. So when you're talking about an examination, you have obviously examinations of business returns and also of personal returns. And in some respects, they're just about the same. In other respects, they're completely different. But the biggest thing is it all starts with income. So that's why whenever I start on any type of an audit case, the first thing I do is I pull my client's income information and then go from there and kind of work backwards.
Speaking of income, I'm sure there's also some other big red flags that makes the IRS take a closer look. What are some of those? Is it high expenses, deductions? What are some of those?
That's really it. People will say sometimes, I don't know if I'm subject to a random audit. And I tell people, listen, the IRS is big, but they ain't that big. Okay. They went from 100,000 employees roughly at the beginning of 2025 down to about 75,000 employees, I think sometime around September. So they lost 25% of their workforce. But even before that, the IRS doesn't employ 20 or 30 million people. I mean, this country has 335 million people. There's well over 220 million tax returns filed every year. And that's a lot of returns. It's a lot of people. The IRS doesn't have the resources to do random audits. Really, it's based upon some type of algorithm, or what I say is simply a trigger. And the biggest thing is, like you say, Mike, it's expenses or deductions. And so when you have very disparate type of deductions relative to the income, it's gonna flag it, and it's something that I believe is done on a software program. I will say this: obviously, if the IRS thinks somebody's involved in, say, some type of very serious criminal activity, anything from drug dealing to terrorism or so forth, of course they may do some type of examination to kind of start things rolling. But for the average person, the 99.9% of the people out there, it's some type of algorithm, and it's usually something to do with deductions relative to income.
Well, let's talk about that income for a second, because there are certain types of income. I'm sure people listen to this. Some have W-2, some are 1099 employees. What are the usual ones that are more likely to get audited given your experience? Self-employment, cash-heavy businesses? What are some of those that could trigger?
It's usually, when it comes to income, it's usually where people don't put income on the return. And that's because most income, or at least I would say the majority of it, is reported to the IRS. So if you have income from a business, you as an employee or as an independent contractor, 1099, those businesses are going to report the income they paid to you to the IRS, just so that they can take a deduction. And so the IRS already has that information on file, so to speak. That's why most of the time when people go through an examination, it's never a couple of months after the tax return was due. It's usually a couple of years before they even get some type of notice. because it takes time for all that to filter through. But the biggest issue with income is where people leave it off the return. And when I say leave it off the return, I don't necessarily mean they're trying to hide it from the IRS, although sometimes that does happen. It's usually where people have income that they don't believe they're subject to income tax on. And so therefore they don't put it on the return. And then the IRS computers, a couple years down the road, are doing a cross reference and so forth. And they'll say, well, this person left off $500,000 of income. And a simple example of that is a home sale. Somebody buys a house, and let's just use round simple numbers. Say they paid $500,000 for the house, and then they end up selling the house 6 years later, and they sell it for $480,000. And they say, well, I lost $20,000 on the deal. Obviously, I'm not subject to any income tax. So they don't put the house sale on their return. And a couple of years later, the IRS says, hey, you left $480,000 off your tax return. The person says, no, I lost $20,000. The distinction is you have to put that $480,000 on the return and then work it back through to show ultimately, in this case, you had a loss and you aren't subject to income tax. But just leaving it off the return is probably the number one trigger for examinations or audits.
Yeah. In that scenario, Brian, like how does simple math mistakes, these math errors, because people are subject, they're human beings. How does that compare to the bigger issues when it comes to triggering an audit, like you said? Because I shouldn't be penalized because I'm bad at math.
Well, the thing is this. I mean, everybody's responsible for their own return, okay? Whether you hire the best CPA in the country or you do it yourself, uh, with a pencil and scratch paper, everybody's responsible for their own return. Usually the math errors have to do with, again, either leaving off income or something to do with claiming a deduction, overstating a deduction. But again, since almost every return is done on some type of a software program, a lot of times it won't let the return process through, or at least get you to the end of it, if there's some glaring mathematical error. There'll be flags will fly up on the software and say, hey, are you sure this is right, and so forth. Because there's certain parameters on the software. They know if somebody's claiming mileage and they put down that they drove 1 million miles instead of 100,000 miles, that's usually something like a software program will flag. But again, everybody's responsible for the quality of their own return, regardless of whether they hire somebody to do it for them or not.
Don't tap zero too many times. You may be in trouble. Well, I mentioned in the intro, Brian, about those notices, those pesky notices in the mail. So someone gets one, and the first practical step that they should take right away, according to Brian Loughrin, is what?
Well, open the envelope, because a lot of times people are afraid to open it. They say, I don't know what's in there and so forth, but just go ahead and take it, open the envelope and take a look at it. Because if somebody is pulled for an examination, really there's two types on the broadest sense. There's what I call paper audit or personal audit. And a paper audit is basically where the IRS sends some type of notification from not necessarily an area where you're located. It could be coming from anywhere in the United States. And the IRS is saying, look, we need clarification on something, or we need proof of a particular deduction. And you just simply respond by submitting the paperwork and sending it back to the IRS. A personal audit or in-person audit is just the opposite. It's where generally you have an auditor who is local to where you live, and they send out the notification that you're under examination, and they want to actually schedule a time to first talk with you and then schedule a time to meet with you, either at their office or at your home or your office, depending upon whether or not it's a business or personal audit. So those are the two main ones. So you definitely don't want to not respond, because there's a time frame to respond. And the reality is, if you don't respond within a certain time, the IRS is just going to proceed with what they believe to be the correction of the error, even though it may not actually be an error on the part of the taxpayer. They're just going to proceed. So you don't want to let it go past that point. You definitely want to at least respond initially.
How you have seen maybe somebody handle an audit the wrong way and how it turned maybe into a much bigger tax debt problem than it should have been.
Well, I've seen it on both sides, with the taxpayer and with the auditors. And the taxpayer, it's usually where somebody ignores it, and that's just it. I've worked a number of cases where I have over-the-road truckers, 1099 semi-truck drivers, where they get some type of examination notice and they don't respond to it. And a lot of times these guys and gals are on the road a lot and so forth, but nevertheless, they don't respond, and the IRS will come back and maybe disallow a deduction. Well, if you're 1099, you have an opportunity to deduct business expenses. And next thing you know, they get a big bill in the mail, or they get these threatening property seizure notices and so forth. Or in some cases, they actually have income or assets seized, and then they reach out. And it's not an impossible situation. You have the opportunity to do what's called audit reconsideration, which is kind of its own subject matter, but you're not stuck necessarily. Okay, even if you miss those deadlines, and even if the IRS comes back and says, okay, you didn't respond, so this is what we think you owe, and here's a big fat tax bill with penalty and interest, it's not all over. Just reach out to us. We can look at audit reconsideration. On the flip side, I've seen situations where auditors, and they're actually referred to as revenue agents or TCOs, tax compliance officers. That's just the fancy government term, where auditors will come in and they'll make some claims about disallowing deductions that are clearly business related expenses, and they're so over the top ridiculous that it's stunning. And in those cases, obviously, we have appeal rights and so forth, but we don't ever really want to settle everything in court. You want to get everything handled, if you can, at the local level. But I've seen situations where auditors will absolutely completely disregard expenses completely related to a business. And I'll give you a simple example. I had a guy, he was just a kind of a one-man band. He was a roofer. He would literally go to people's houses and put shingles on their houses. He would re-roof houses, and he had a pickup truck and a buddy that would help him on occasion. And he'd get these small contract jobs with insurance carriers, and he would show up to the job site, and he worked all around the Tampa Bay area. And the guy took in quite a bit of money. I think he made roughly $400,000 one year gross receipts and so on. And the IRS came and did an audit and so on and so forth. And when I got into it, which was at the beginning, he didn't have a mileage log in a form or fashion that they felt it should be. And so they completely disallowed all mileage. And the auditor even told me that we know what this guy does. He drives all around the Tampa Bay metropolitan area 5 days a week, putting shingles on different people's houses. And he shingled, I don't even know what it was, maybe 100 houses or something that year. I don't remember. It was a lot. And I said, well, how could he possibly disallow all his mileage when you know what he does is he goes to people's houses to put shingles on their houses? I said, unless you think they're bringing their houses to him, you've got to give them some mileage. So ultimately, we got it worked out with the help of a supervisor. But those are the kind of situations where I tell people, if you feel like you're going up against a brick wall, give a call to our office. I mean, you got to apply common sense to audits like anything else with the IRS.
Brian, in that example, let's take you out of the equation. Can having a tax attorney really change the outcome of an audit? Why is it so imperative to have the experienced professional like yourself?
If somebody leaves income off the return and it's an honest mistake and or maybe not, so whatever, it doesn't matter. If they leave income off and the IRS comes back and says, hey, you left 80 grand off your tax return, I mean, there's not anything I can do about it. I mean, if you've claimed all the deductions you can claim, there really isn't anything I can do to lessen that severity of the tax. I may be able to look at penalty abatement because you will be charged a penalty for failing to pay and so forth. But obviously, if it's clear and people say, yeah, my bad, I'm completely wrong about this, then handle it on your own. You don't need to pay somebody to help you with that. But again, most of the time when people call me, there's some type of a dispute as to either an expense or income. I've had situations with what I call paper audits where a guy a few years ago, I don't remember, again, I'm using round numbers on income. To me, round numbers work. I think the guy made $125,000. Single guy, no kids, no spouse, made $125,000 working for a company, no other side gigs. The IRS came back 2 years later and said, you left $125,000 off your tax return. The guy said, what are you talking about? Well, it turns out that the W-2 had been submitted to the IRS mistakenly twice by the employer. Now, again, I don't know how that happened, but according to the transcript, the guy made $125,000 working for XYZ and $125,000 working for XYZ. And the guy says, what do we do? And he kept, running up against the IRS and so forth. I finally got it straightened around. So again, if there's some type of income dispute or deduction dispute, that's really where we can come in and assist. But if it's something that clearly you've claimed something that, especially income, you've left it off, then realistically you're subject to that income tax. There's really no point in paying somebody to try to help you with that.
Well, Brian, as we put a bow on today's episode, that person's listening, they got the letter, they opened it, they're reading it. What's the single most important move that they should make right now?
Well, if you have any doubts, give a call to our office. We offer a free consultation. We'll talk to you about your situation and let you know what might be the best direction to go. If there's something we can help you with, we'll let you know. And if not, we'll tell you the same thing.
Yeah. Great advice. Brian, thank you as always, my friend. I appreciate it.
Thank you, Mike.
Thank you to everyone out there for listening to this installment of the IRS Debt and Audit Podcast. If you received that letter that you may want to throw away, don't throw it away. But if you received it, or you think one may even be coming, don't go it alone. Do me a favor right now. Visit Tampa Tax Relief or call Brian and his team over at 813-694-7177 and schedule that free consultation with Brian and the team. Do me one more favor. Hit like, hit subscribe, leave a review, comment, share the episode with someone who needs to hear it. I am Mike Leon. We'll see everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.